Hi, this is Randy Finney with the Right Side of the Chart, and today is Friday, August 18th, 2016. In this video, I want to go over the gold and silver mining sector. We'll take a brief look at gold. We'll look at GDX, a few of the components. I'll maybe rifle through those quick and focus in on some of my favorites. Just be very clear up front. It appears to me that the mining stocks, particularly the sector as well, but I'm going to show a few individual names here. I think there's going to be a tremendous shorting opportunity here very soon. Uh, these will almost certainly be added as official trade ideas, some of these. Now, before I get into the charts, I want to solicit feedback for those of you who are members of the site. You're able to comment below any post, whether you're a gold or silver member, and you can also make comments in the trading room. Do me a favor if you would. Let me know your preference as to whether you prefer to stick with ETFs such as SIL, the Silver Miners ETF, GDX, or any of the leveraged like Nugget or Dust, or if you prefer individual miners. I can tell you that I see some charts that are just stand out as phenomenal short setups on individual stocks that, in other words, have much more meat on the bone than GDX itself. And I'll kind of hit on that in this video. So, like I said, do me a favor. I work for you guys, so let me know what you want. If you want to just focus on the individual ETFs, there is safety and diversity there versus trading individual names, but you remember, when you go long or short an ETF, you're shorting the good with the bad. Or if you go, long or short, you're buying the good and the bad together because it's a basket of stocks. All right, enough on that. Let's dive into the charts. This is GDX. This is a daily chart. I have a couple versions here. This one has a lot more markups. It's quite busy chart, but you can see, the big divergent low. We had this, downtrend line off the September 12 highs at bullish, very strong divergence, and as just about anybody knows, whether you trade them or not, there's just been a phenomenal run on the gold mining stocks, and all along we've been building very powerful divergences. Let's flip back to that other chart that's not as busy. You can see here a divergent high in GDX, negative divergences building all the way back from this point. Now, it was really a series of two divergences. I've had some comments recently in the trading room that divergences don't work, at least in the equity markets or whatever. And I've shared my thoughts. These things play out unless they're taken out, and more often than not, they do play out. By taken out, I mean if you make a higher high in any of these MACD, RSI, any of the indicators or oscillators that you're looking at on divergence. But as long as you have a lower high while prices are making a higher high, you have divergence, and some play out more than others. If you look at the vertical line here, that was our first divergent high back here in both the RSI and the MACD, and it may not look like much. Find a clean board here and tell you what that resulted in. It was a correction of about 13%. So what I call a tradable correction. You could have swing traded that, and we did. We shorted that drop there. But now we've only continued, similar to the equity markets, to build even longer, more powerful divergences, with a series of divergences. So that's what I'm looking at there. Take a quick look at the weekly chart. And I've mentioned this one before. This line here at around 31.27 is where I show it. I've mentioned this quite a bit recently, although my commentary in recent weeks has been light on gold and GDX. I made mention a few weeks ago. They're on watch for trade setups, but I just haven't seen the right moment. They hold up. Gold and GDX really aren't going anywhere, but they're not going down. They remind me a lot of the market. Just kind of hanging up. But more importantly, they've stalled now for weeks. This is a weekly chart. 1, 2, 3 weekly candlesticks. We had 4 just below it before. Again, this is a big gap back here in 2013, early 2013. These are Fibonacci time sequences. So it looks like we're coming up on a Fib date. I don't know where that started from. Must be going back at a major point in GDX. But there it is, guys. Extremely overbought. I don't think in the history of GDX, I think I've looked back on the Huey. You have to go back to the Huey index because there's a longer trading history on that, or charting history. The Huey's an actual index. You can't trade it. But GDX is an ETF, so it's only been around for so many years. And I went back on the Huey, and I don't, if I recall correctly, I didn't do it today. I've done it in the past. Mining stocks have never been so overbought in their existence. Look at the PPO, which you need to use on a weekly chart instead of a MACD, especially on a chart like this. And it's just at high levels, crossing over, rolling down, looking for a bearish. We haven't had a bearish cross. You can see the PPO made a bullish cross back here, kind of flatlined, never really went negative. So it's remained above the signal line all the way up until, well, we don't have a cross yet. I'd have to put a histogram up. They're pinching right now. But there's my point here. Oh, extremely overbought at resistance, that big gap resistance back there, as well as that previous reaction high. It got tested from below back there. And, daily chart is really what I'm looking at now. So there's the case on the daily chart. You can see the divergence, as I mentioned, a powerful divergent high, second consecutive divergent high, really an extension. And we're right dancing on that trend line now. I mentioned a couple weeks ago that I wanted to see, or I'd like to see gold punch up and make another slightly higher high. And that's still in the cards. We have this potential trend line here. We've broken below, and like I said, gold has stalled out. It's really gone nowhere. It's below where it was back in early July right here, as you can see where that divergent high was put in. So at that point, gold did top, and it also made, should have had it drawn out here, I think I do on my other chart. You can see it was a divergent high, clearly divergent high. It could put in a second divergent high. I drew that out in one of my scenarios recently. Let's say we happen to punch up, eke out one marginal new high, and then turn back down from there. You could see the PPO here would more than likely peak out, and the PPO is very similar to the MACD. You can see it. There's the MACD here at the bottom. I'm going to use a PPO because when we get into these charts of the mining stocks, the moves are so large based on the scaling of the chart, and that's where a MACD just no longer functions well when you have extreme price swings on the time period or on the chart that you're looking at. Do a better job of using the PPO, which is very similar to the MACD. So that's that, and I can see the possibility if the market rolls over here, you may see that extra flight into safety in gold. However, I think that the upside in mining stocks is minimal. If you're, long-term investor willing to give these things a little room on your stops, like you need to when you trade the miners I've talked about in the past. You're trading even GDX. Let's take out the 3-time leverage on Nugget and Dust. Even GDX alone, it's very typical to see that thing swing 5% in a day or more. And, if you're trading Dust or Nugget, you're looking at 15, 20% up and down days. So if you're not comfortable with using a stop that is several times that, then don't trade Nugget and Dust. And with GDX, unfortunately, you have to use, in my opinion, swing trading these I'm talking about, not day trading. Stops and measured in the double digits, 10, 15, maybe 20%. If you're shooting for returns of 30, 40, 50, 60% or more, of course. It's all about risk to reward, and I've talked about that a lot. I don't want to get off track here. You just adjust your position size down to account for those larger than usual stops. Otherwise, you try to swing trade GDX with a 4, 5, 8% stop, you're almost assured to have your stops run before your targets hit, just due to the volatility in these guys. Before I get on too much further into the charts, let's just take a look at something here. I often talk about shorting the 3-time leverage ETFs, especially for a swing trade like this. This is very obviously trying to catch a top here on the miners if and when I add these as official trades, which could come out any minute. That's why I want to get this video out so you guys have time to absorb the chart, see if you agree with the analysis. But let's find a clean board here on GDX. Okay, here's GDX. Here's a peak back here. You can see this top that occurred. We topped out in early July at this point where the crosshairs are. That's July 5th, and you can see we kind of hit that wall. So what I'm going to do is put my crosshairs here at July 5th. And it's not, coincidentally or not, that's where we are today. So there it is, 2 months, almost, I should say a month and a half of sideways trading action, because if you follow the horizontal line to the right, you can see that's right about where prices are trading today. So you're flat. Had you gone long or short GDX, you're right back to where you started a month and a half ago. You've had a little ride down, a little ride up, so no one can declare victory long or short. However, here's my point. Let's take that same point here on Nugget. And there it is, the July 5th highs, that same point. July 6th, I'm sorry. And you can see now below 158.47. So I'm going to measure it in percentage terms to where we are today. It's not a whole lot, but it's almost 6%. Now what I'm looking at is the pop-up box in the left-hand corner. Down towards the bottom, the red shows right what I'm trying to grab, roughly on today, where today's prices are right there. So there it is. It's about a 6% drop in Nugget over that same time period, which once again, going back to GTX, grabbing that same point in time, July 6th, those highs back there, and going to where we are today. Well, don't really need the measuring tool because it's straight across. You saw, as I pointed out, that horizontal line. So you're flat. So that's where it favors somebody who shorted. If you were bearish back then, of course, and you shorted Nugget, or even if you were bullish and you went long Nugget, you're now down 6%. And if you were bearish and you shorted Nugget back then, you're actually up 6% on the position, where the stocks have gone nowhere. Let's try it the other way. Let's say you were bearish and you went long dust. So you would go back to that July 6th. There we are, right there at the crosshairs. And you can see that that position now is down. You've lost money. You're down almost 9% according to this. Yeah, there it is. 8.47, 8.5% you've lost waiting for the mining stocks to roll over. So if that doesn't make my point, I don't think anything will. So let's just move on now and take a look at the charts. All right, we're 11 minutes in, so I can't go through them all. What I like to do normally, and I will if there's time at the end of this video, is I have my watch list. These are all the components of GDX. I like to usually go through at least the top holdings. Those I sort these by capital market cap, this column right here, and I will hit on that, but I'm going to start out just to show you my favorites right now. More than the gold mining stocks at this point in time, I think the tremendous opportunity on the short side will be in the silver mining stocks. This is SIL, the silver mining stock ETF. And if you want to talk about an extended run here with extreme overbought readings, let's get rid of that MACD. I wanted to put back that PPO, throw the MACD up here, grab a PPO. It's going to tell us a better story. And there it is. And let's mark that divergent high right here. So you can see the very steep divergence. This is a long standing uptrend line off the lows back in January. Very well defined, numerous reactions along the way. We started building divergence actually right around this point. It's almost an equal high, but this is really where this final top here, you can see the steep divergence in place. Now this trend line hasn't went, so we're not there yet. I'll start putting up the setups to give you guys advance notice. And, this one, it appears to me a breakdown is imminent at this point. It won't happen. Imminent means, at any point now, sooner than later, but that can be days. It can sometimes be weeks. And here's a long-term chart of SIL. You can see some resistance back here, support back here at this point in time. Very, very well-defined level, broke down, we gapped down below it, came and back tested from above, and we're poking our head up just a little bit above that. That's not too much. Yes, we are above it. You can take that for what it's worth, bullish. You want to wait for a move back down below. That, in my opinion, is what I often refer to, guys, as a momentum overshoot. I'm sure a lot of you have heard me use that term. And momentum overshoots come when you have a very strong sell-off or downdraft in a stock or in the markets, or in this case a very strong, powerful, this is a near vertical rip off the bottom, and momentum often carries you above. You overshoot the support or resistance that the stock will ultimately fail at and reverse. You can see the PPO pinching down, hasn't made that bearish cross yet. So the real, all in, or the solid sell signal will be on a move back down below that level. That level, by the way, is, I have that line, call it 50-50 on SIL. See the bearish crossover. Those are really good signals. You can go back in time, just take your own charts, and when you see nice separation too, when you have the lines pinching and flat like this, don't pay them too much attention. But back here, when you see this nice separation between the PPO and the signal line, there's your bearish cross, there's the move down. Here's some nice separation, bearish move down. These are don't underestimate these moves. They don't look like much. I'm using a log scaling. That's a 22% drop right there from the highs to the lows. You know, cross over there, bearish cross, and you get the picture. So nothing's 100% effective, but these are pretty good signals here. And most importantly, you use these in conjunction with breaks of horizontal support, price support, or trend lines, I should say. And there's your trend line. So I don't know if I already have an alert. I'll definitely put one on right now. I recommend you do the same. Again, use a log scaling if you want to replicate this chart. Just go off the January lows. And there's your trend line. There's your divergences. And we'll take a look at a few of the stocks. This is some of these in this watch list here. This is showing me the components of the Global X Silver Miners ETF, and I have to imagine there's more than this. I'll have to check the website. TC2000 may not be populating all the holdings. It is possible, but I'd be really surprised to see only, what is this, about 10 or so holdings in SIL. Either way, these are companies you can trade. And I know I have a lot of Canadians that use the site, are members on the site. And so if you see a symbol like this, SLW.TO, that's just the shares that trade on the Toronto Stock Exchange. Now, Silver Wheaton Corp also trades on the U.S. exchange under SLW, so you pull that chart, and we might look at that in a second here. Very steep trend line. I don't have every note on these charts. You can draw the divergences, or you can see those divergences down here. So you have negative divergence at the high, very steep divergence too when you look at price. There's a trend line. That's your early sell signal on SLW. You have that support right around there. There's a gap. I'd want to keep the video reasonable, so I won't go over all the price targets right now, but I will definitely, especially if I get the feedback, Randy, hey, I like to trade some individual stocks. Can you put up some official trades with price targets? Even if they're not official, if you ask me for a chart, if you're a member of the site, no problem. I'll put together a chart with some target levels and suggested stops for you. There's SLW. There's the American shares right there, the shares that trade on the U.S. exchange. Same story. Obviously, the chart's going to be very similar, and this one does have some potential targets there as well. PAA, this is Pan American Silver. Again, these are the Toronto Exchange shares, and this also trades on the U.S. exchanges under PAA. Look at that nice bearish rising wedge. Huge gap to fill down below, so that would be at bare minimum a target right here, around 2240 or 2250, call it. You know, I think the momentum will be pretty fast once this little uptrend is clearly broken. You'll see a rush to the exits like we haven't seen, especially in some of the smaller cap stocks. That's another theme, if I have time, I'll get to in the video. When we look at GDX, I look at the biggest names, and their charts aren't as bearish. And they're also, when there's the first big correction in the miners, keep in mind that the funds, the institutions that hold these names, there's more liquidity in those big names. There's a lot more shares. What you're going to see is as you go down the line, again, pull up GDX here. I'll show you what I'm talking about. If you happen to use TC2000, throw up this capitalization market cap column, and you go down the line, you see some of the big names like Barrick, Newmont. They're 23, 25, $24 billion companies. You go down the line, you have these little tiny companies down here. You know, there's McEwen Mining. It's a $1.3 billion company. And you go down here, AKG, it's only, it's 900 million. And what happens, those low float or smaller market cap companies, it doesn't take a lot of buying pressure to just send them, through the roof. This one ran up, what is that, a gain of 250%. Likewise, when money starts coming out of the mining stocks, look at it this way. There's forced selling. If GDX starts coming under redemptions, those that have been long the mining stocks, they sell GDX. What does GDX have to do? And what are the funds like the Midas Fund and all those gold stock funds out there? They have to sell what they own. And in this case, they own AKG, so it'll come under forced selling. And because the market cap is smaller, you're likely to see a bigger drop, all other things being equal. And of course, you look at the charts. Some of these, again, like I said, have better looking charts than others. All right, back to the silver miners, and then some of my favorites, and we'll wrap it up. SIL. Which ones did we get to? PAA, I think we did last. HL, Helka Mining. I mean, wow, look at that. Look at that wedge. This stock has run up from the lows 400%. I haven't even looked at the week. Oh, there it is. Beautiful. Look at this weekly chart. I haven't even looked at this before the video, but this is a resistance line that I've had there for a while. Um, yeah, that resistance line's been there. You can see the reaction from below. You can see reactions from above back here, reaction again, breakdown, impulsive move down, validating that level was support back then. Came back up, tested it perfectly from below, failed. Tested it again, failed. That is very solid resistance. So a stock that's run 400%, extremely overbought, probably more overbought than this stock has been in history. You're looking for a very healthy correction when the music finally stops in this sector and everyone goes to try to grab a chair. And I put up fibs just on this one. You can do it on all of these, and just to kind of give you an idea. A minimum healthy correction. I am longer term bullish. I'm going all over the place here. I should have mentioned that before. The case for the gold stocks and silver stocks, longer term, the charts still look good for now. I'm just looking for a correction in an ongoing bull market. But a correction in these little buggers can be, here's a 38 fib. That should be a minimum pullback target in a healthy correction. And so even if we pull back to the 38% fib, there's a drop of 31% in HL from where we are right now. Wants to go on and make a deeper correction, which is certainly a possibility. Let's say we went down to the 61.8 fib. In other words, we're retracing about 62% of the gains off the lows. That's a 50% drop, and it's a lot of meat on the bone for a trade. Here's another one in the SIL, another silver mining stock, FVI, another one on the Toronto Exchange. You can see the patterns are just very well defined. These uptrend lines, the divergence is very clear. It's been a powerful rally all along, but we didn't have divergence. This last time we had that correction, there was almost divergence, but the PPO made a slightly higher high, as did the RSI. This is the first time on the daily time frame in many of these stocks that we have clear negative divergence, confirmed because the MACD is already, or the PPO in this case, clearly rolled over and is currently pointing lower down, as is the RSI. MAG Silver Corp. Nice little clean rising wedge. There's your entry. You set a trend line alert here, or depending on your trading platform, you can set an order to automatically execute. I like to watch the sector. I don't like those automated trades. If a stock breaks down, let's say I wanted to short MAG Silver, on a breakdown, I'll take a look at GDX, I'll take a look at gold, I'll take a look at silver, I'll take a look at the silver mining ETF and some of the other big names. Make sure they're confirming, because if you have a breakdown in one of these stocks, but yet the sector is holding up, especially the silver mining ETF as a whole, gold stocks are holding up, that's likely to prove to be a false breakdown, and maybe you get a back test at the higher level. So, to be safe, the trend has been very strong, just like with the equity markets now. You'll need to see a good deal of evidence, and don't worry missing out on the first 5-10% if you're looking for a drop of 30% or more. Better to be safe than sorry and not get burned in these guys by shorting too early. EXK, Endeavor Silver Corp. There's your trend line. This one, you have a couple things to note here. You did have, back here you had a divergent high. There was a equal high on the RSI right there, lower high on the PPO at that point, and it did lead to a correction, and that correction was about 30, over 30%. So these divergences do work. They do play out. The stock went back up, so it was a correction in an ongoing bull market. Now, what do we have at this point? Even more powerful. Those divergences have continued with the PPO making lower highs. And I drew here this micro or smaller divergence within. You can see the two peaks there. The PPO looked like it's about to roll over, maybe rolling over now. And that same divergence here on the RSI versus this divergent high. Now, what is that? That's what I call a wedge overshoot. Let me take away that line for a second. Zoom in. You can see how prices punched above the top of there. They also hit resistance. I have to go back a little farther. These two lines aren't random. They're showing you all these peaks back here. It's a resistance zone where EXK is failing at, or at right now, testing. I can't say failing yet because we haven't rolled over, but it has failed to punch through there. It's what stopped the advance so far. and that's also a wedge overshoot, I call that, when you punch through the top of a bearish rising wedge as I had here. And those usually result in very quick, very swift moves back down within the wedge and out through the other side. I'll give you an example right now. Let's see, there's a energy stock that I was watching. I had it as a setup on the site recently, CIE, Cobalt Energy. I had it in this bullish falling wedge. It never triggered an entry because it failed to break out, and what happened is the momentum carried it down through the downside of the wedge, and as is often the case, you can see it snap back within the wedge. It gapped up big today, and it's now above the wedge. So I don't know, that might have been an earnings-induced gap there. Doesn't matter if it was already priced into the charts. You had the bullish falling wedge pattern. I had the MACD on that one. I would have shown the divergence. I still have the divergence in place, and it's popped through the wedge. It's up a little much. It's up 31% right now. It was up a little higher earlier, so I haven't put it on as back as an official trade idea. I want to see what it does, see if it holds this breakout or falls back within the wedge. But either way, that one looks good. And again, I just wanted to point out the example of a wedge overshoot. They work both ways, on bullish falling wedges or bearish rising wedges. So right back to the silver miners, and maybe we can wrap this up. Covered most of them. That one I don't see much. And we'll just take a look and go over what I wanted to tell you about on the on GDX. All right. Here's Barrick. I'll sort these by market cap, which they already are here. You can see the market cap column. Let's just go through these and just take a look at them very quickly. All right, Barrick. There's nice divergent high. You can see Barrick has had divergence forming for many months now. There's this minor uptrend line right here, which it almost cracked through it. It pierced through their intraday today. Actually broke through there yesterday. We hammered back right on the trend line. And I don't know if you can make it out. There's a doji right now, the green doji here, right on that trend line. So what this one's doing, it's clinging to support right now, that trend line. And the PPO is poised to make a bearish cross down below the zero line. The divergence, as I said, is confirmed. RSI is now moving below that 50-ish level, which tends to act as support or resistance when tested from above, and bearish if we get below there. And that is, again, the largest cap-weighted one. I don't know if it's the actual top component of GDX, but it'll be up there. It's certainly within the top 5. Newmont, same story. And this is a story, guys. I don't want to sound like a broken record, but very powerful, long-standing divergences. So this correction that is coming, I believe, in the next few months will be, again, in my belief, the largest correction that we've had in the miners. Certainly all year, possibly in years. We were in a bear market up until this year, so we're in a bull market now. And there's the charts. If I don't have the divergences drawn out on each and every one, you can see it there. Prices going up, making a higher high. At this point, you had divergence number 1 there, and divergence number 2 on that double top high so far. That failed at resistance. You can see that. Each of these horizontal lines on my charts are, either resistance if above or support if below. Some of these I haven't updated. So again, if you want to trade an individual stock and you want some price targets, just drop me a line on the site. FNV, again, we're going down in order of market cap. So these are the big names, and even the big names look poised to fall. However, remember what the silver miners look like, as I'm showing you the top components of GDX. Silver mining ETF looks like it has a lot more to fall, as do a lot of the individual silver miner names. And you know what? I'll wrap it up here. There's a few silver miners I didn't show you yet. If I went through the components of GDX, it's going to be the same story. You'll see the large cap stocks definitely look poised to fall. Just they look poised to fall a little less than the a lot of these silver mining names. Here's CDE. Huge. Look at this divergence. I mean, this is just a beautiful chart. And again, is a time there. It's tough right now because I'm still convinced that the market is on the verge of a pretty healthy correction that will happen any day now. That's not guaranteed. But let's say I'm wrong on the market. If I'm wrong on the market, that's even better for these mining stocks, because if the stock market just keeps going up, let's say this is a trend, we don't have the first pullback we get is bought up, very shallow 3-5% dip, and the market heads higher, makes new highs. Sooner or later, the fear trade in these mining stocks it's going to let some of the bubble out of this recent run. And if the market does correct, I think that a lot of the gains, you might see a flight to gold. I started out early in the video saying that we could see that marginal new high in gold. However, I think the upside, because everything I just showed you here, a lot of these stocks, including GDX and SIL, at long-term resistance levels. So I think that the miners have probably already gotten ahead of themselves compared to the metal. And you can see these just, beautiful patterns. By beautiful, I mean numerous reactions on that trend line to help validate it. You can see that CD is already broken down. It hasn't started moving down impulsively yet, and that's because this sector hasn't. So that's another thing you want to watch for. When you start seeing some big red candles and a lot of those trend lines that I showed you that haven't broken yet, once they go and you see the majority of the stocks breaking down, then you can probably, with confidence, enter position, especially if you're a little gun shy to pull the trigger on a short trade. And again, if you don't have a lot of time, you're not a full-time trader, or you don't have time to manage individual positions, then you can either short GDX, or like I said, if you can get Nugget, if you're able to short it, short Nugget. And if you're not, because you only trade in an IRA or a non-margin account, Dust will work. Dust will certainly work, especially if it's a very quick, nearly unidirectional sell-off, which I think it will be. In that case, believe it or not, Dust can actually outperform a Nugget short, or it can outperform, I should say, 3 times what GDX does on the downside. Just like Nugget, if you look at the run that we had up from the bottom, Nugget actually did better than, if I'm not mistaken, at least I know it did during certain points, better than 3 times GDX. If that's confusing, check out the FAQ section on the site under the ETF questions, and I explain when I talk about decay how you can actually leverage ETF can actually outperform the 2 or 3 time leverage that it uses depending on the trend. And what other ones did I want to show you? There's SSRI. This is really nice. I didn't have the chart drawn up yet, but you can see a pretty well-defined trend line. You can see the divergent high, and actually, more importantly, this really steep divergence on that most recent high, as well as on the RSI right there. And did I do Pan American Silver yet? I think I did. If I didn't, there it is. Very steep, powerful rising wedge with divergence. And last one, and I'll let you guys go. Harmony. This is actually a gold mining stock. It's not a silver stock. They may pull. Keep in mind, a lot of these pull silver and gold out of the ground, depending on where they're at. So just long-standing, powerful divergences. MACD pointing lower, or PPO in this case pointing lower. RSI already down below the 50 level, pointing lower. This one's already broken down. You can see a support level right here. And ultimately that one at the very least I think is going back to the $3 level. It's a 409 right now. I have support at 305. $1 drop on a $4 stock translates to a 25% drop. So not a bad trade. And again, or I didn't mention this before, the fact that we rolled off resistance, it's fairly objective if you can give those wide percentage stops. To short some of these things here, or start scaling into a nugget right now with a stop somewhat above the recent highs. You can do that if you're aggressive, and especially if you take a small starter position. And my advice would be only add to that position on strength. In other words, as GDX or nugget drops. Don't dig yourself in a hole if this proves not to be a top, or if the top is coming but it's another 20% higher on GDX. Just take a small position, set your stops accordingly, and if the mining sector continues to roll over, you can continue to scale in. All right, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.